All right, welcome to the show. I am going to go over what the Fed said in his meeting notes, the FOMC notes. I'm going to go over what the Fed said in his talk. I'm going to talk to you guys briefly about how the market interpreted it. Largely, it has been so far interpreted as a bit more hawkish. The market sold off basically on the notes, but then as soon as the Fed started talking, it began to pick up. And however, I'm going to go through three companies that are reporting earnings at the end of my review of what the Fed has said and done today. We're going to look at Tesla, Microsoft, and Meta, and we're going to analyze them at this moment in time in the first month of the year. This is the Stocks with Josh show. Thank you guys for joining me. Hit that like, it sends the video out to more viewers. Hit that subscribe if you need help interpreting what the market is doing and why. I'm going to give you guys my breakdown, and I think you'll find it interesting. Let's start by going over some of the things that we got from the FOMC notes. The first thing that was said or pointed out to me there was that the economy is expanding. So that's interesting because it really tells all of the analysts that the Fed is not currently afraid of a recession in 2025. So I want you guys to process that. One of the things that we got from what the FOMC notes were is that the Fed is not currently seeing recession down the road, which the other side of that coin, though, is in an expanding economy, the threat of inflation is still at hand, which right off the bat is why the market initially took this as hawkish and why bond yields began to pop and stocks began to drop. Because if the Fed gets hawkish again, then he pivots again and he potentially raises rates. Now, the market took it into stride because he balanced it with a lot of caution, pausing, time of calibration, and evaluating and looking at data, which is typical. The number two thing that stood out to me was he acknowledged that inflation remains, as he put it, somewhat elevated. He said, as he was asked about it, that the goal was still 2% and they had made progress towards that goal. They did omit that line, and I'm jumping ahead a little bit, but they did omit that from their notes because in the last couple meetings, they've patted themselves on the back and done a celebration lap and highlighted the fact that they were getting closer and closer to their goal. Today, that was omitted, and a statement that was included was that inflation remains somewhat elevated. The first two major takeaways were definitely hawkish. The third takeaway was that the Fed was watching risk from both sides of his dual mandate. Now, that doesn't sound too bad, or it sounds responsible, but I actually don't like it because it says this to me. The Fed had previously pivoted in 2024 in September, giving an aggressive, he could have gone 25%. He gave an aggressive rate cut. He pivoted. And when the Fed pivots, it should be because it's time to pivot. But now we're back to dual mandate with a heavy focus, suggesting that he may have pivoted too soon or read the data incorrectly. So that also fell under the category of a hawkish Fed or a pivoting, repivoting Fed. The fourth takeaway was that he was prepared to adjust policy, which also was interpreted as hawkish. Why? Because the current policy was to focus on the labor market and to trust that the rates that had been risen were doing their work or doing their job to bring inflation down. And now, basically, when he says we'll adjust policy, the policy at hand had been entering into a time of focusing on cuts. Well, the adjustment, again, is hawkish because the only place to go from cutting is raising or not cutting. That's the adjustment that he would be alluding to. So those are the major takeaways from the FOMC notes. This was another fact that we have to take and give attention to, and that's that the vote to leave the rate where it's at was unanimous. Now, you might say, well, that was expected, Josh, and sure, 98% chance that there would be no rate cut. But it would have been nice if there had been a dissenter, somebody that was suggesting that the economy would benefit from a rate cut. basically there was no dissension to the more hawkish stance. And so what was not said kind of speaks loudly to some, and it definitely didn't go from my notice. The last time, as I mentioned before, the FOMC notes included the statement that had been omitted today that they were successfully moving towards the 2% goal. That was omitted. But in the talk, when he was asked about the progress, he said that there was progress made towards the 2%, that they had gotten closer. Okay. And he also highlighted that the conditions remain solid in the labor market. Now, as we speak, I'm just going to take a quick peek at the SPY, and the SPY came off of its bottom, and it basically got almost within market open price. It fell short of coming back to market open price today, and now we're going back towards falling off, which means that the up move that had been slowly generated by him talking seems to be fading a little bit right now and losing some momentum, which means that yields will climb. And I don't want to interpret the whole day or guess how the whole week will go, but the fact is that the market gave us a giant green candle in the middle of this process after a flush, and now we're slowly fading again. So a point of interest, and I'll actually tell you that I highlighted this, but I don't know that I fully understood it. But he said that there would be a late summer wrap up for monetary policy framework. And I saw that comment, and I thought I need to research that a little bit. So I'm actually highlighting something that I don't fully understand. I don't know if he's suggesting there that the entire framework of what they're going to do in 2025 will be established by midsummer. If that's the case, then I can tell you that that's going to leave everybody in a place of uncertainty and suspension from action. If that is the case, if I'm understanding that correctly, but I need to research that a little bit more. He was asked, he was asked again about, did you mean to omit that statement? He said it was not meant to send a signal, and he said that they were committed to the 2% goal. Now, I also interpreted that as hawkish because he could have answered that any way. He could have answered that it would be data-driven, and he could have said it's being analyzed. He could have given a vague answer, but he chose specifically to answer the question that was given to him in his talk. The question was, why did you omit that you're making progress towards your 2% goal? And he didn't say because, things are 50-50 right now. He basically said, we're committed to that 2% goal. So I felt his response was decisively hawkish. And as I'm looking at the SPY in the corner of my eye, I'm seeing things selling off more. I think, to be honest, safely, I'm not doing any live trading in this session, but right before I started this video, I did take a little starter position in some Tesla puts, and I'll get to that in a minute. I haven't really alerted that. It's a total lotto trade, but let me just go over that. It may be something I close up. It may be something I hold into close, but we'll go over that in a little bit. So the market. So what does it all mean? Well, the market clearly interpreted it largely as hawkish and bearish for stocks at the moment, okay? And I personally, having read and reviewed the notes and listened to him talk, I personally thought he was way more hawkish than he has been in previous times. That obviously is going to have an impact on stocks, because the last thing that the market wants is for the Fed to possibly raise rates, because I think personally that would be a tilting point. That would be a pivot point for the markets to the downside. And that would bring us, in my opinion, into a bear market that could lead to a recession, even though I think that he was doing everything in his power to suggest to kind of steer people away from it. I don't know that it isn't a huge concern. But I think that if we take him at his word, he doesn't see recession in 2025. But he can create a recession in 2025 is what I'm saying. He doesn't see it. It's not on track, but he could create a recession in 2025. I think analysts are going to largely interpret his overall position. They're largely going to interpret it that this year, no recession. However, we may not continue to run the way we did in 2023 and 2024, which brings me back to many of the things I've said at the beginning of this year, which is the market's going to go through a price evaluation, specifically on big tech. I think when you get to the charts, I'm going to show you Meta could be a blow off top moment. We're going to know a lot here by the end of today. And then the big question is, when we get this run up like we're getting in Meta, if we do get an incredible response from a great earnings moment and we get a massive wick higher, there's a lot for me to interpret there as a potential blow off top when you look at the macro environment that we're in. The question is, are stocks going to significantly climb from this earning, or is it going to remain to be a sell the rip? I've been saying for quite a while, it's a stock picker's market. We've picked some stocks, Intel, AMD, Alibaba, NVDA. We've picked some stocks that actually were going up today. AMD in particular was doing very well. Intel was holding up very well. And the last I checked, I've got to go back and look at NVIDIA, but the last I checked, it was holding ground as well. And someone say, well, it's down, Josh. We don't get too worried until it falls beneath 118. I got to pull it up. So I would tell you that the threat in the market is a hawkish Fed who raises rates. That's going to create a bear market, and a bear market, if it shifts or turns the sentiment of investors, it could turn into a recession or a stock market crash. Don't get panicky. Don't get too far ahead of ourselves. We had a hawkish Fed today. The next thing that's going to happen is Donald Trump is going to react to this. You know he's not going to keep his paws off of what the Fed said today. The Fed was asked a number of questions about Trump and the administration, and I thought that he answered them fairly at most, but definitely didn't suggest that he was going to be working in any form of cooperation with the president, and I'll be interesting to see how the president responds. Let's keep all this into perspective. January, as of this moment, the markets are climbing now, which is good. So we're doing a little bit better here as I'm speaking. I'm not moving the market. January is up 2.5%. And we talked about this, that as the month of January goes, sometimes it gives us a signal for how the year will go. Now, does that mean that we're going to climb from January all the way to December? No. But it does tell us that if this month closes green, even if we have some turbulence in the next quarter, it means that we likely are going to find within the first half of this year an amazing buy the dip opportunity. We did it with NVIDIA. We've done it with some select stocks. And I think that there's some stocks that are all the way at their all-time highs that are going to probably have some good earnings and may have blow-off tops. And those are not ones that I consider to be investable at the very top of an incredible run, that they're buyable now because they're just going to keep going higher and higher. I don't think that's the case. We see that already we've had some FUD towards the AI story. The next round of FUD, and I've been telling you guys about this at the end of December and early January, is going to be the AI revolt of investors who are expecting an ROI, return on investment. They're going to scrutinize in 2025 the results of the spending. For example, Microsoft has spent, if I recall, around $20 billion a quarter, which is great if they can give a return on that investment. But if they have a really hard time showing expanding profit margins, then there's going to be an AI revolt from Wall Street. And it won't mean that the AI story is dead, and it won't mean that these aren't going to be companies that we want to hold into 2025 and 2026. It just means that it's going to provide a dip and a buying opportunity later on. So I'm going to remind you guys, right before I get into this last part of the show, one. Thank you guys for joining me today. Thank you for watching. Please hit that like button for me and hit the subscribe if you need more help trading these choppy markets. I want to add that we live traded today. It was a choppy day. Markets are doing kind of well right now, but we live traded today, and you can find me to live trade with me in the Stocks with Josh Discord, which you find because it's the name of the show, www.stockswithjosh.com. And you can come check out the community, trade with me, trade with my crown traders. Let's talk a little bit about the overall market, and you'll see it with your own eyes in just a second as I get into three stocks. Sounds like there's an alarm going off downstairs. All right. My wife's an amazing cook, but I have a feeling she's cooking something, and it got a little smoky here. All right. Thank goodness that passed quickly. Okay. Market. Low volume, low momentum, bad breadth. And we're not talking about bad breath. We're talking about low breadth, okay, which means that right now, overall, more stocks are declining and hitting their 52-week lows than there are stocks accelerating and hitting their 52-week highs. And when you don't have broad market participation, it typically is a signal that you are moving to the downside. We know that big tech has been the only thing that's really been propping up the market in 2023, 2024, and here so far in 2025 as well. And the minute that that story tips, or the minute we hit the top of that story, then we've got a lot of companies that haven't been participating in the rally. But let's look at three really quick. We're going to look at Microsoft, Meta, and Tesla. I'm going to keep my analysis very, very simple. Club Sosa, I've got to give a comment. He must know that my wife is Peruvian. He says it must be Lomo saltado. It's being cooked at Josh's house. I wish. I don't think we're having Lomo today, but my wife did just load up on what's needed to get Lomo cooked. All right, let's go into the charts real quick. I'm going to start off with Tesla, okay? Now, the market's having a little bit of a rally. Fed either said something that they liked or they're just processing it. I'm going to tell you guys, I want to take a step back and look at this. So here's what we've got going on. In truth, this is the one stock that doesn't have a lot of bearish divergence. So let's just sort of point that out. In truth, we're coming off of our high, and momentum sort of reflects the same thing down below. The MACD is where we get our image of momentum. It's not allowing me to draw on it. There we go. And, oh, it must be too close to the top. Okay. There we go. So momentum and the top are in alignment. We have an area where we're pointing down. But here's what I want you guys to understand. It becomes a sell signal in the very same way that we got a buy signal on the MACD. Back here, we had this incredible cross up, and it gave us the last couple months of an insane move on Tesla when we got above the zero line on the MACD. So this was a buy signal at the time, and we got this incredible move of momentum that we've been riding for quite a while. Now we're in a place where we've been coming off of our high, and we're very close. If you can see, this blue line down here is very close to touching the zero line. And if we get a crossover and we get the orange to cross over, then we're going to likely have a period of time in which we're fighting and testing the bottom. I've said it many, many times on this show that the ideal long-term investment level for Tesla was right around 354. And we talked about historic support for a lot of big tech companies. And in truth, we've gotten all the levels we wanted. All we had to do was wait and be patient. And today we've got Tesla is reporting earnings, and we are still at an elevated stock price. And I'll show that to you guys here real quick. I'm going to pull up the weekly time frame. And I'm going to pull on the Watson envelope just to illustrate, or even the Bollinger Bands. Yeah, okay. So you can see that we're outside the Bollinger Bands, and we've had an incredible run, break of structure. Let me turn that off. And we have a lot of room back to the middle of these Bollinger Bands, okay, right here. A lot of room back. And so the concern that I have going into this earnings is this enough right now to propel the stock back to 484? That's the big concern. And if you go down here to the weekly MACD, we have this potential cross under, which would signal, it would change from a longer time frame. It would change Tesla from a buy to at best a hold, okay, if we got that crossover. So literally by tomorrow, if this is crossed under by the time the market opens up, that is killed or canceled the buy signal for Tesla. If we see this turn upwards, then we could see an extended rally for Tesla. But to be honest, if you go back in history and you look at the MACD, the momentum that we got to get up here, we're already at elevated levels. Like we're at some of the highest momentum levels that Tesla's been at for a long time. And I will just go back and show you this. The last time we got up to these levels and got that crossover that I'm talking about, it was here in a similar spot to where we're at now on the MACD. Okay, very similar. And we ultimately, on earnings, you can see this was also very close to an earnings event. We came all the way down to the middle of the Bollinger Bands. We spent some time consolidating and went higher. So I would tell you that this is why I would believe that there is more risk to reward. Now, if Tesla takes off and gets back to 484, I'll love it. I'm long Tesla and I own the shares. But it wouldn't change my concern that there's more risk to the downside than there is potential reward to the upside. That's my view on it. And so even though I love the company, I see the potential for it to definitely come back and test support beneath 354. The confirmation of that would be to break the local support at 373. And so that's, at the moment, more risk to the downside. Tesla would have to absolutely have a shock and awe event to keep this stock going higher. And that weekly crossover could absolutely signal a move down to the middle of the Bollinger Band or the basis band. 484, Little Bob says, 484 for Tesla is absurd. Not saying it can't happen, but at what point does a 200 PE not make sense? I completely agree. I would say this is why I've taken a small lotto trade here to the downside on Tesla. But it's money that I can afford to lose because lotto trades are gambling, because they're really, the overall chart says risk is greater than reward opportunity. And so on the basis of that, I'm taking a small little position play to the downside. All right, let's talk about Microsoft. And this is the one where I think the picture is a bit more clear. I'm not going to get into many of the patterns that I see in here. I'm just going to talk a little bit about the fact that we do have this descending resistance line, but that's not even the biggest thing. Let's come back here to the bearish momentum. This is the high of momentum that Microsoft has gotten. This is the highest point on the chart, and it coincides with this price point back here. This is the current momentum level, and this is the current price. So price has gone higher since February, of 2024. Price has gone higher. Momentum is absolutely going lower. Now, as of right now, we're getting this little bit of a shakeout here. Okay, we're getting some activity. Everyone's fighting. The bulls and the bears are fighting over where this goes next. But let me just share with you the bearish concern, because I guess I'm a little bit concerned about the elevated prices of stocks. Okay, even if earnings comes out great and this shoots up, I'd be more concerned about a double top. And I'd be a little bit more concerned about the fact that we've lost so much momentum. And this is where this has been a buy signal. Let's go back to it using the MACD as our reference. This has been a buy signal on the MACD crossing on the daily time frame, the zero line. It's been a buy signal since back here, okay, right back here. And we have enjoyed Microsoft running up since February of 2023. So really 2 years, this has been under a weekly buy signal. 2 years under a buy signal. Now, if this crosses under here, we've come down, gotten very close, had a little bit of a pop-up. If we cross under, then obviously we're going to have much more potential to a downside move. So again, the risk to reward isn't great here for me. I don't love long-term investing in Microsoft. I just not at these levels. And somebody will say, but AI. And I would say, but you can see how fragile the AI story can become very, very quickly. But they spent $20 billion a quarter and investors want a return. That's the big but in the room. All right, let's quickly analyze Meta. Now, Meta has been an incredible performing stock. And let's just do this. Okay. I didn't pre-draw this, but let's kind of use this as our defining range. Okay, here we go. Meta's been running, and I'm going to say the same thing here. This is the momentum high right here, and this is the price high that was achieved. Now we have a much lower momentum low, but we have a higher price. This is classic bearish divergence, and it signals a coming reversal. And so even though Meta has been easy to play to the upside, and we've given Meta alerts in the Stocks with Josh Discord for playing it to the upside, I'm going to say the same thing I said a moment ago. The top, we could have an incredible week ahead of us. If Meta comes out and crushes it, we could break the middle of this ascending channel, and we could literally go as high as $788. So there is that possibility. I think we would have to wait for earnings to predict or suggest that. If you take a much longer view, you can see that Meta's been running for a long time. And, there is bearish momentum on the chart. And even if we get a move up, we need to be watching for a candle with any kind of a rejection wick. And I'll leave you with this thought. I would say this is bullish. And if I were to play this, I probably would play it bullish to the upside. If I were to play a lotto trade, I would say it's relatively bullish. However, if tomorrow or in the course of the next week, I think the trigger for going puts is obviously one of them is this 652. That's one trigger. The next one's going to be the break of this channel. That would be if we open and close a candle outside of this channel, it means that the up move is going to get a little bit rough. And you do see that we have this additional space down here. If we expand to that, we have some additional room over here, which I think expanding to that is reasonable. It actually means that we're very, very close to a potential high. If I were to change my ascending channel and go with a wedge, which I think is also reasonable. Okay, let me just quickly do that. Get rid of the channel. Both are bearish. Let me just turn the other one off. An ascending wedge is also something to be concerned about because ascending wedges are bearish, and when they break to the downside, it's gonna be a longer pullback. So right now we're at a place of potential resistance. I'd be watching very carefully for a large wick here. So I would say that if I were to gamble on this, I'd probably take the continued move to the upside, but I'd be watching very carefully tomorrow and the next day to see if we get a bearish wick or to see if we get some sort of a breakdown. Because this is just run and run and run. So Amazon, people are asking for Amazon. Baba so I said this in the live today, that 100 was the target. And I said that we need to watch for consolidation between 100 and 97 and to see if this flag, eventually we have to break above 100 again to continue higher. Specifically, it's 102, 104. But at the moment, Bob is doing very well as far as a long-term hold and investment right now. It seems like everybody got excited about China because they did so well with DeepSeek, and Baba is a huge investor, it finds out, in AI. Leap options on Meta. I feel like what I'm saying is no way. I wonder when I see a comment like that if people are on the same page with me. Let me go back to Meta for a moment. Okay, yeah, this is a very bearish pattern. So what you have to really be asking yourself is, does Meta, even if Meta, let's say Meta goes, let's say this plays out and we get a little higher, right? Meta is still trending and it can trend within this pattern for a while. But again, this is a huge bearish pattern. When price goes up and momentum goes down and volume goes down, both are true here. It means that we're getting close to a reversal, right? This is the pivot high. We'll get a pivot low. And Meta's not had a pivot low in a long time. Let's go look at the monthly chart. If you like Meta, you got to do what you got to do. But just look at this chart with me for a minute. Look at this momentum, right? So the only play that I would do here would be a short-term play to the upside. Everything would have to be short. I've said it before. I don't see this as long-term investable, not until we get a pivot low. And where's historic support? Well, it's right back here. Let's just pop this in. And someone's going to say, well, are you predicting this? No, I'm not predicting it. But if we did get a major pullback, everybody would be telling you then that 380 was the structural support for Meta, which it is. That's the structural support. And so if we were to break outside of this ascending wedge, the pivot low that a lot of market people would be expecting would be back here at 380. There are some other support levels here at 484, but the soonest I would consider a leap would be probably around this 480, 490, because we're at all-time highs. This is the type of candle we're looking for. Okay, let's see right here. This is the type of the candle that we have right now, right here. And even there, it consolidated for a while before going higher. So we're at elevated levels, and I would prefer to, we do get pivots. It pivots. All right. So we get pivot lows, December 2018, March 2020. So 2 years later, November 22, 2 years later. And we haven't had one since 2024. We haven't had one yet. So we're kind of overdue for a pivot low on Meta, even if we're bullish long-term. So you're not going to get any long-term leap alerts from Josh on Meta until we get a pivot low in this stock. It comes every 2 years. We're overdue. This could be a blow off top. And then if we get back to this 380, we could become, or 4. I'm not going to say it has to go all the way back to 380. It doesn't have to. It could be 480. If we come back to 480 and there's reason, we can absolutely go long and do leaps on Meta, but not for me now. All right. I'm going to wrap it up there. I appreciate you guys joining me. Come check out. I have gone into a deep dive explanation of the leaps folder in the VIP live trade session that we did today. If you didn't get a chance to join us in that, you want to go through and halfway through, it was a long live trade session, a couple hours. Halfway through, you want to check out what I'm saying about how to use the leaps channel for your best benefit. You can day trade and swing trade off of the data that I've got loaded into that spreadsheet. And we dropped in a bunch of new names that weren't in there before, so you want to go check them out. All of the technical data is refreshed there every single hour, but there's a few columns that I update. With the top, they're yellow, and those columns I've got to update because I can't automate that part of it. And those columns, I put a date as to when I last updated it, sort of a buy, hold, or sell. And so you want to reference that date. If it's been a long time since it's been updated, then you need to be aware of that. I appreciate you guys joining me today. We're going to see how these markets go. Let me take a quick peek at the SPY. The SPY went up, it went down, it went up, and now it's going down again. So as I speak and as the markets wrap up for the day, we're ending at a lower price, which doesn't give us great vibes going into these earnings or tomorrow. Big tech could surprise and give the SPY another bump tomorrow, but I'll remind you, watch out for the bearish divergence, watch out for the low volume, watch out for the declining market breadth. And remember that when the market takes stairs up in this type of environment, sell the rip on expensive stocks might be the best thing to do, because when the market wants to turn around, and we saw it this week, we saw it with the chip makers. It took one story to put them on the elevator and send them right back down to the bottom floor. So that's my thoughts on the day. I appreciate you guys all joining me today. Drop a heart in the comments for me. Yes, I am holding some Tesla puts. Let me look at it real quick. Yep. Let's see if it's gaining me any ground. Just a small position size, just a little lotto trade. We'll see how things go. But yeah, I've just got a couple of them. All right. So I gave the trade setup today that it was bearish under 392.20, and it went bearish. It dropped pretty heavily from there, and we're still under 392.20. And so at the moment, I would say the chart is still leaning bearish for me. But let's see what happens with Tesla. We'll evaluate it tomorrow, and I'm sure I'll have some trade setups for you guys on these three companies. Matter of fact, I'll commit to that. We'll do Microsoft, Meta, and Tesla trade setups tomorrow. Make sure you check them out. If you don't know what I'm talking about the trade setups that I give every morning pre-market for the community to trade with. It's a signal to buy, go long, or to go short based on the cross of price. Thank you, Dunel Petit Frere. I don't know if you're French. It sounds a little French. When I was in France a couple months back, I was crossing the road right in front of the Notre Dame, and I ran into a follower there. It was a lot of fun. If I'm back to France, if you're French, I hope to meet you. Apple earnings, I haven't gotten that far. It's not out of danger zone, but it definitely had a little bounce, but it's not out of danger zone. Again, the Discord is stockswithjosh.com. Just going to go through a couple comments here. SoFi, today it dived. Yesterday, yep. So Vimal Raj, and he makes a comment about the W pattern on NVIDIA. So let's go look at NVIDIA real quick. So I don't dislike this chart right here. I think there's a lot of interest in NVIDIA. I don't see any major breakdown. I've made it very clear in the past that NVIDIA has to break under 114 to be scary. If we lose 114 and we open and close a candle beneath 114, then my targets become 190. So we definitely would lose some ground. This candle doesn't look that bad. We do need to get above, kind of above 130, 128. We didn't end up quite doing that to get back up to 135. Another strong question I got the other day was about the 3-day rule of gaps. And, I mentioned it in the video, and I want you guys to understand that, that first of all, this 3 days hasn't passed. And so if I made the wrong decision to take risk on NVIDIA, well, that will be figured out over the course of 3 days. The rule is basically to wait on a gap. Now, that's contingent on this idea. It's contingent on the idea that there is no news story. Maybe the analysts are reacting to earnings or something along those lines. The gap in and of itself, minus any major news story, that is the primary reason to wait 3 days. But we had a news story that was canceled by other news stories. And so that would be the closest thing to a possible V-shaped recovery that we might get. But there's other factors. It also hit my buy signal that I've given you guys for 6 weeks. Taking it all into consideration, I made a alert to buy, which I'm going to quickly check how we're doing on those. The alert was to buy leaps on NVIDIA, and those are still significantly above my entry price. I entered those around $18.40, and they're currently at $20.33. So it's still working for me. And I also alerted Intel, and those are up just barely 2%. I'm still happy with that. And AMD is the big winner of the day. I alerted those yesterday, and those are up 16%. And so I would say those were all good calls made in the Discord. Are we out of the woods with NVIDIA? No. Matter of fact, this could be, let's talk about the chart for a minute. This could be turning into a continuation to the downside bearish flag. We could consolidate here and make another leg down. That's absolutely a risk. The MACD is turned down. We've gotten into a very choppy area, and so there's risk there. But I will tell you that NVIDIA is the AI story. It underwent Trump's comments about additional regulation. But let me just comment with you on that. I'm going to share something with you that again, is my interpretation of Donald Trump's comments. Listen, guess who needs NVIDIA to win the AI race? Okay. The United States government does. US does, right? The US investor does. So unfortunately, they can't do it without NVIDIA. So they're not going to put as much pressure on NVIDIA as they can. And I guarantee you that advisors close to Trump will tell him that. When they cannot beat up this company. They cannot, because this company can retaliate. They've got means of their own to retaliate against excessive regulation. So I think it's more likely, and this is what I've shared with you guys a couple times on this page, that if Trump wants to do something that he controls, it's to further help companies like AMD and Intel and U.S. companies to help them grow and compete with companies like NVIDIA. And I think that the trade that I've been giving you on Intel and AMD, and there's issues of valuation there. I'm definitely concerned about some of the valuation, but it's largely driven. This is not one. The technicals are speaking to me, and I've shared those technicals with you. But in that case, it's the fundamentals that speaks to me louder. And the fundamental is that Donald Trump is such a take action, pro-American companies that I think that and he's going to be limited in how he can address NVIDIA. Some people will say he won't, but I'll suggest to you that he will be, that he's going to try to use his power towards American companies and helping them like AMD and Intel. The other thing that I want to mention is the comment that was given regarding NVIDIA, that there was a W-shaped pattern, and I made it very clear that the confirmation of the W pattern was something that a lot of you guys should know if you followed my page. We have the structure, and then we've got confirmation of the structure. Confirmation of the structure was a candle had to open and close above $28. Now, I said it correctly and I shared it correctly, but doesn't mean that everybody understands it. Did the W pattern for NVIDIA signaling a move to 135, did it confirm? No, it didn't. Okay. So was my technicals wrong? Absolutely not. If you're learning, there's the lesson. So I'm only saying that to help you. I said it jokingly in my video today. I trust my own technicals. I'm not saying it for my sake. I'm saying it for those who are trying to learn. You've got your pattern, and then you've got your confirmation of pattern. I gave you the price in the video. That would have had to have been a candle to open and close above 128. Then we would have been confident that we were going to move to 135. We didn't get that. We're consolidating after a gap down, and what we have today is a higher low. So what do we need to watch next on NVIDIA? We need to make sure we don't make a lower low. As long as we keep making higher lows, those are all buying opportunities. So again, if you're not listening to the detail, you might have missed what I said. If we're making higher lows, that signals buying opportunities. But if on the course of the next week we make a lower low, then it means that the current up move is on hold for now. Am I going to buy NVIDIA? Yes, I'm going to buy NVIDIA on this dip. Okay. I was patient Patient, patient. I told you guys to be patient. We didn't buy at 145 and 150 like everybody else did. If you followed me, you trust me, we didn't buy then. We bought when it got to 116. Now, if it breaks down to 100, am I going to come out here and tell you I was wrong to buy at 116? No, because I think 116 was a good decision. And I think it'll be a good decision to buy if it breaks beneath 114. I'll hold off a little bit for that 100 level, maybe even the 90, but a lot would have to be going south in this economy for that to happen. I don't really see that right now, but we'll take it one daily candle at a time. I love you guys. I appreciate you joining me. Thank you for watching the whole video. Thank you for the likes. Thank you for the hearts. We'll see you in the Discord. Peace and blessings, my fam. Talk to you later.